So, well, there you heard it. Lots and lots of talking points, plenty of questions and enough to debate and discuss. So, let me now welcome Mr. Raamdeo Agrawal as well as Mr. Navneet Munot on the stage. They need no introduction. Market veterans have seen many, many cycles and many, many Diwalis. Please, if you could join us on the stage.
Welcome to this stage, welcome to the program. We've done many somewhats together, and as I said, this is a special one for us because 25 somewhats. So it's been a long journey, as CNBC celebrates 25 years as well. Great to have both of you here. So, I mean, I think we put on the table a lot of questions really about what we're seeing. Is this finally the correction that everybody was saying is not coming? Are we finally seeing it? Navneet, you go first.
No, first of all, many congratulations to you on 25 wonderful years. I think India has come a long way, and you guys have contributed to that journey of India, to the journey of capital markets and the wealth creation, phenomenal wealth creation that has happened in last 25 years in our career. I always say that there is this book of Malcolm Gladwell, Outliers, where people born in a certain part of the year, they do well in life because there is some big change happening. I always say that people like us who got so lucky, who joined the market in early 90s, have done so well. If you had integrity and was working hard, you've done so well. But the next 25 years look even better. Notwithstanding this correction, and we can discuss more about it, I don't think that the last few days give you any reason to worry about the next 25 years. This was expected. This is a healthy correction. I think there was a point where the momentum had taken over, where people were not discriminating between a good news or a bad news. The stocks had to go up every day. But this cannot continue. Trees don't grow to sky. Trees don't grow to sky. And I think some bit of correction is very healthy. And I think there is a bit of sanity check. And I think from here on, maybe a little bit more time correction plus some price correction, things will start looking good again.
Raamdeo, what's your thought?
Congratulations on 25th year of CNBC, and I have seen it all. In the sense, I think I've been coming for 25 years here, and you guys kept patience with all the fools like us, and actually made us grow. I mean, the contribution of CNBC for the capital market growth, even Motilal Oswal's growth, or our brand equity growth, has been immense. So thank you very much for that. Coming back to your question about correction, it is the healthiest possible correction and overdue correction, I would say. And even if a bit more, in fact, it'll be deeper the correction, better it is for the people, because the expectations were going wild. You know, some people are saying that I want only 2-3% monthly return, month on month, that too compounded. So, you know, that expectation was running wild, and once the expectations are way beyond, see, ultimately, even last 5-year return is just about 16% of the Nifty.
Correct. Your
1-year return could be whatever, how so exciting it is, but 5-year is just about 6.5%, 10-year is just about 14%, 25-year is 15%, 40-year is 15%. So that's the base rate of India. So anchoring the expectation, and you just see today it's a different market. Out of 175-80 million people, only 30-35 are the people with more than 5 years experience. Otherwise, all of them are seeing market for the first time.
Exactly.
So I don't know how they behave, and for them to set wrong expectation and get disappointed in a very early stage, I think that would not be very good.
They say it's always better to lose money when you start, so that you're a little bit more cautious. I mean, and not be in euphoric times, because then you expect euphoria all through the investing.
So you
journey.
can come simultaneously. I mean, like 1 lakh crore, 2 lakh crore can flow in simultaneously. But if they get disappointed for a prolonged period, then they can also exit simultaneously. And that can destroy the market.
Let's ask the person who's part of the industry that's emerged sort of supreme, right? In the last, I think, 5-7 years, what Indian mutual funds have done, how they've evolved and how they've led the market is the amazing story. So, Navneet, that's the $10 billion question right now, right? And will that inflow keep coming in and offsetting all the FPI selling? You know, what does anecdotal data, ground checks, and your gut tell you?
So we're lucky to be called market movers, but the real market movers are the retail investors of India. the resilience that they have shown, the maturity that they have shown is really credible. And of course, you guys have played a role in handholding them through the ups and downs. But I think we have come a long way as an industry. 25 years back, when you guys started, maybe the total industry size would have been 1 lakh crore. Today, we're talking about 67, 68 lakh crores. What a journey that the industry has seen. We have added more AUM in last 1.5 years than what the total AUM we had 10 years back. Correct. That's the pace at which the money is coming. And the best part is a large part of that money is coming in the form of SIPs. And the 24,500 crores is ticket size is 23 or 400 rupees per month per ticket. And that makes us very positive about the structural aspect of financialization of savings in India. I'll just give you 2 data points. 24,500 crores into 12 is almost $35 billion. I don't remember in last 25 years when you started, was there any year where foreigners invested more than that? No. Just see the power of this money. Yep. Number 2 is, as an industry, we are almost $800 billion. And Raamdeo ji has been meeting, we have been meeting global investors all our career. I think this was the size of US asset management industry in late 80s, sometime in 87, 88. In the next 10 years, from 88 to 98, they grew from almost $800 billion to $5 trillion. So you know where we are headed. I call this the India's 401k movement. The difference is without a tax incentive, without a large fiscal incentive, I think it's a voluntary, on a voluntary basis, individual investors saving every month on a disciplined basis for their retirement nest. This is one of the biggest revolution that has happened, and I feel very positive about India on the sustainability of this.
You know, it's uncanny, Navneet, that you're making that statement sitting exactly at the same place. I think it was about 6 months back, same place and same forum. We had Chris Wood sitting on that chair where you're sitting today, and he made this exact same reference point, saying the way the US market went, that 401k moment over the next 2-3 decades, and India is, you know, starting on that cup. So that's amazing. I mean, both the views of course, sort of coming together there. But Raamdeo,
there'll be many countries in next 20, 30, 40 years who will say we are exactly where India was in 2000.
Where the US, where India was. Okay.
Let me just finish that point. Very near, again, forgive me, but very near term, if I have to ask you. I mean, that point that I made, $4 billion is coming into equity mutual funds.
Little more than that.
Little more than that. I mean, depending
last
on
3 months, the gross inflows have been almost 1 lakh crore per month.
Right.
The net retention, if you include the equity funds and hybrid funds put together, plus the equity index fund, would be almost 50,000 crores a month.
Okay. So my question is this. So there is that money which is coming in. There's a starting dollars, but FIRs are selling. They sold about $10, $11 billion already. What about FIRs are exiting? We don't know what they will do, and we will talk about that, what is triggering this and whether we are done with the bulk of outflows. Just the dry powder, are we, if this continues, will we...
Markets would come back. Today it's other way around. When I look at the purchase transactions on the days when you see a correction of 1.5%, 2% or so, very few sessions and last whatever few, which is very, very different. People want to top up their SIPs on those days. There'll be some cyclical aspect. There will be like maybe if markets don't do well for few months, there will be few people may is very much in touch.
Just to complete that point, would we run into trouble if this continues, if selling continues? We hope it does not.
No. If the pace continues the way they are doing it, like close bit of the reserve, what are
mutual fund
cash reserve. My sense is maybe 60-70% is already deployed. Because correspondingly, as much is being bought, despite market is reserve comes down. Now, if their adjustment is not complete, see, other thing is that adjustment is also not unlimited. They are selling primarily for adjustment. The guys who neutral weight and coming back to India also neutral weight. So that's the, earlier estimate was about 15 billion max. So we have done about 11, 12, maybe another 2, 3 on account of China. Then comes our own, so there is a daily flow. That flow I don't think is still impacted. And there must be some guys if by chance that China related outflow turns out to be 25-30 billion, and that too in one shot,
Then that could
there
be
could be a
bit
deeper
concerning. But
correction.
that's not what you're expecting.
Like earlier people were saying from where correction can come. Okay,
And
here you are.
exactly, nobody perhaps imagined that it'll be because of suddenly FPI is starting to sell, right? But you know, on move to another issue, and typically when you're dealing with one, you know, it's like Murphy's Law and more things pile up. And now suddenly we're dealing with a slowdown in earnings. This is the first time we're talking about single-digit sort of earnings growth. And now there's a big issue about consumer, you know, whether there's a bigger consumer slowdown in the making. Raamdeo ji, where do you stand on the way earnings are, and whether this is just a temporary blip, or whether this is something that's concerning you?
It has to be a temporary blip because we cannot go from 4 trillion to 8-10 trillion without consuming more soaps, more milk, more everything. I mean, consumption has to take place. 60-65% of the economy is about consumption. We'll need more car, more motorcycle, more bicycle. Everything will need more. Just that this is an adjustment phase post-COVID. You know, all the rich guys, they are buying. So it's a K-shaped recovery, and I hope that it trickles down and private capex picks up. There are a lot of hopes, but right now consumption is not looking to be very exciting.
Navneet, comment on this. Again, this was one of the things that market will always give you what you don't expect, right? Which is why the market's the best teacher. So the FPI selling was one aspect, and now suddenly there's talk of urban consumption slowdown. Your thoughts on what you're seeing and hearing from companies?
No, so there's surely a moderation in growth in the urban India from the base that we had earlier. You look at footwear, apparels, QSR, passenger vehicles, across the board. You can really feel it, and I'm sure companies are telling you that, companies are telling us that. There seems to be some bit of uptick, or at least early signs of uptick in the rural growth. Over the last couple of years, everybody has been talking about a K-shaped recovery. The premium products doing well, but the rural consumption is not doing well. I think we are seeing some bit of reversal. Maybe the terms of trade are shifting with higher food prices, which is like hurting, let's say, an urban consumer, but probably benefiting a rural consumer who's more dependent on agri income, better monsoon, and maybe welfare spending. We can discuss the separate aspect of that in the long run, what it can do to macro stability, but maybe the higher welfare spending by the state governments, last 14 or 15 governments in last 6 months have announced some or the other scheme, that money probably is helping the rural consumption. So that's a brighter aspect, but yeah, I mean, we are all concerned about the slowdown in consumption. 2/3 of our economy is consumption, and if you have these numbers of single-digit growth, that's definitely concerning.
That's consumption, that's one part of it. But Raamdeo ji, on earnings overall, I mean, I remember in our earlier conversations earlier this year, you know, you've been talking about reasonable expectation to have like 12 to 15% earnings compounding. Are we still on track with that trajectory?
No, that is the main pain point. Like at the beginning of the year, my head of research told me, Raamdeo ji, we have done 1,000 this year and 1,150 next year. For sure, it can only go up, it cannot go down. First quarter result, he comes down to 1,100. Now this quarter result is not even out. He's already at 1,070. I said, where will you go up? Are you going to back to 1,000?
Yeah.
So, you know, the pace of decline in the earnings is quite alarming. And their estimate this for this quarter is just about 6-7%. Even if you see the business standard aggregates, it's just about 6-7%. And so we are not seeing too many bright spots in the earnings side. And markets are at all-time high. So, you know, there are two. See, market is also dull, dead, 12, 13, 14, 15p. That matches, you know.
Yeah.
But right now, market expectations are running at more like 15 to 20% kind of earnings growth. And here is a market which is kind of, and supply is building up, you know, massive supply is building up. And other side, the earnings are disappointing. So this is concerning.
But does the consumer need help? There is only two ways, monetary or fiscal. Do we need to start to think about that?
Is the guy to tell.
But RBI has mentioned, I think the governor has
Yes,
mentioned
governor has
that
mentioned.
we don't have the scope for rate cut in the near future. They want to build the credibility of anchoring the inflation expectations around 4%, which in the long arc of thing is a good thing. Think about the way risk premiums can come down.
Sure.
If you are able to build that credibility that your policymakers will ensure inflation in India stays around 4%. This is what US did in 80s and benefited for 4 long decades of ensuring a non-inflationary continued expansion, a nice era, I think, which India will also have. From the fiscal perspective, as I said, that state governments are spending more on the welfare side, but I think we need to have a right balance. They also need to do the capex. So the last 3 or 4 years or 5 years, the central government has done the heavy lifting, expecting that private sector will come in and state governments will also step up on their spending on the capex side. That hasn't really happened to the extent that was expected, and I think that will be one of the main trigger for the growth recovery, because once you have that investment cycle kick in, then you create the jobs, then people have more incomes which they consume as well as save, and then it gets converted into investments, so you get into a virtuous cycle. Just throwing more money into people's pocket to get growth for 1 or 2 quarters won't structurally help us.
One more aspect on the local issues, and then we'll get to global. What's happening with BFSI? And for the longest time, that's been the sector that people are waiting to sort of see take off. But what we're realizing is that because the RBI is as prudent as it is, we're seeing issues right now, whether it's slamming the brakes on unsecured lending or whether it's gold financing, and that's showing up in the earnings of those entities as well. So, sir, where do you stand on what we're seeing, these asset quality concern, rise in slippages, RBI action? What are your thoughts when you're looking at financials now?
Financials, at least on lending side, is pretty tough. I mean, regulator is coming heavily on them to control the rate of growth of, then they're saying your credit deposit should be less than 100 or 70, 80, whatever. So clearly there is a regulator who doesn't want to go wrong in terms of excessive expansion of credit or maybe unhealthy credit. They are seeing early signs of slippages. So lending side definitely looks to be kind of stuck in the sense that there is no 20-25% growth kind of scenario. And that was a sector which was leading the pack. And that is the largest part of the index also. And that's why private sector banks, if you see, they were the growth warriors, like they'll grow at 25%, 22%, that kind of thing. So that has been, because liability mobilization, another controversy which slightly is dying down is about money is coming to the stock market, and hence banks are not getting enough money. So I think maybe Navneet has a better answer.
Comes off a little bit that problem.
People are not buying soaps because of...
ultimately जाके पैसे तो HDFC बैंक में जमा होना.
Absolutely. Yeah.
So I think it is about more about the money supply.
Cannot impact the bank deposit growth.
That issue has been explained and has been debated, and I think it's now been put to rest.
Exactly, has been put to rest.
But then what that also tells us is that if you're expecting growth and sort of the driving engine to be consumer, that's not the case. If you're expecting financials to do that heavy lifting, that's not going to be the case. So then what do we look out to? I mean,
not that much, by the way. I mean, it's let's say the expectations were very high relative to what we are delivering now. I would put it more that it's a cyclical slowdown than something very structural. All the structural story that we've been talking for last several years, the reforms that have happened, the investment we are making in infrastructure, be it physical, digital, and social infrastructure, everything else that we have done, I think that will play out the way it was envisaged. We are going through maybe a period of cyclical slowdown, but I remain optimistic on the longer end.
Now also, it feels like Diwali.
One of the things that what we are discussing today, and you talked about the valuation relative to 2007 and 2021. One of the things you need to keep in mind that this time what we are discussing is an earnings slowdown, but the balance sheets are in a great shape. Raamdeo, tell me, relative to any period that we have seen in any bull market, this time balance sheets of both the corporate India as well as the banking sector, financial sector, the government sector. There is a small part of, I would say, household sector which has got over leveraged, maybe some of the unsecured personal loans, etc.
That the RBI is trying to solve.
Exactly. And you have to give credit to our regulators, how conservative and how prudent they are.
Let's do one thing. We have a fantastic track audience with us. So we have the entire global thing to discuss, which we will do, but let's also open it up to questions. Nimesh?
I would like to ask questions to both the guests. It's Diwali time, we talk about wealth creation. You gave a nice setup on the top down, where India stands in earnings and everything. But Raamdeo, I want to ask you, for the benefit of the viewers and new first-time investors, how do you identify a big winner like Trent? I'm asking this because, I met a very senior fund manager last week, and his biggest regret of this year was to not buy Trent. I believe you have in your fund as well. The stock has done phenomenally well. It's always been expensive. So, because you've seen so many market cycles, how do you identify a winner like Trend and ride for a very long time?
Stock tip chahiye yaar, Nimesh ho gaya.
Next Trend.
you have to find, see, one of the things you need for this kind of stocks to come through is to find a tailwind, massive tailwind. See, what happens is, markets don't know where the tailwind is going to come up. Say, energy sector, it was a dead. Suddenly in last 12 months, energy sector is thriving all over. I mean, historical IPO just about closed yesterday. I believe 250,000 crores have been kind of put in the demand. So clearly it is backing the tailwind. So you have to find a tailwind where tailwind is. Like capital market has a tailwind. 4 million customers are coming every month. So you have to find who are the beneficiaries of that tailwind and then go and buy.
One person is sitting next to you in terms of benefiting from
Yeah,
it.
so everybody is, so you have to figure out like energy transition. So you have to find one tailwind. See, what has happened is Buffett and all has taught us, and he has overtaught kind of thing. People. So what has happened is this quality buying, good franchise buying. But what has happened is the last 25, 30 years globally, these companies have become exorbitantly expensive, and they are not growth companies. So if you have 70, 80 P multiple and 5% growth, how will you make money? By no mathematics can you make money. Okay, but it looks very nice on your Nestle, Lever, and I don't want to name too many. So, but so these names are not going to make money for you. You have to find the one where the tailwind, you are early in identifying the tailwind. And you bet on that. So like, I'll tell you now past. So like, I remember buying Bharti Airtel in 2003. So at that time, there were no phones. In India, there were 40 million fixed lines for this country, $1 billion plus. So the phone was absolute dire need. And then these guys, they come, they grow like 5-7% month on month. That kind of growth. But it was not making money. So they came out with IPO at $45 and quickly it became $19. Okay, you could buy entire Bharti for 5,000 crores. So I was lucky to identify that, yes, this is going to be a growth sector. I bought it for doubler. My always intention is to buy a company which will double in 3 years. Okay. But it turned out to be 25x. So now I can say I bought a multi-bagger. No, it turned out to be multi-bagger. So you never buy a multi-bagger to start with. You buy as a healthy investment, and it turns out to be, the tailwind turns out to be so big that you end up getting the kind of a trend kind of a return.
HDFC Flexi Cap Fund, it's multiplied 200, it's multiplied 200 times, close to 200 times in the last 30 years. And of course, I must say that mutual funds are subject to market risk. On a serious note, past performance is no guarantee of future. But what it shows is the power of compounding. What it shows is the power of an Indian economy where we are so lucky, where the economy has been growing at a decent pace. You have a corporate sector which converts that growth into their revenues and profits. You have a stock market which converts that into the returns for the minority shareholder. And you have a mutual fund industry where with 500 rupees you can participate in the same growth. This is phenomenal. This has happened only in the United States and very few countries.
No, there are only two
countries.
countries. There are only two countries which are compounded. India and America.
Exactly.
There is no other country. So there are more failed countries on this count. Then, so if you don't invest here, go to US. Otherwise, don't go anywhere.
I think long-term returns are dollar returns are 12%. Both markets, right?
I think so, more or less.
20,
but it's a compounded return. It's not a jerky
compounded.
one.
Exactly.
That in 1 month you go up by 30%, and then next 30 years you don't do anything. It's not that kind of market. I mean, the market makes new high almost every year here. I mean, even if there is a massive breakdown, in a year's time it just comes back.
Yeah, no,
so
absolutely.
that kind of compounding has not happened anywhere.
I think that's an emphatic
We're
statement.
talking about 15 days of correction and maybe a quarter of earnings slowdown. I mean, we have handled much bigger challenges in 25 years when all of this has compounded.
I think Hormuz, you want to ask a question?
Actually, I wanted to ask both of you gentlemen, for a better part of 2023 and for the earlier part of 2024 as well, right? Everybody was talking about one sector, that was the PSUs. Everybody was talking about PSUs. Every day you would see stocks go up 6, 7, 8, 10%. Now that these stocks have corrected 30, 40, 50% from their peaks, and some of them have corrected by that extent in just 2 or 3 months. For a first-time investor, sir, you mentioned that most of the participants in the market who have come post-COVID have not seen a cycle like this. They've not seen a 2008, they've not seen a 2017, 2018 kind of a mid-cap, small-cap meltdown that they've seen. What would your advice be to such kind of an investor who would look at a past performance saying, "Ke haan, ye to 2 mahine mein double ho gaya, 3 mahine mein double ho gaya," and then you see the kind of fall that you see? It's very easy to get disheartened, right? What would your advice be to such kind of a participant and a sector like PSUs now? Do you think that a 30, 40, 50% correction has now made valuations healthy?
No. See, I know PSUs have been disaster for 15 years, 20 years. From 2005, they were the commanding heights of India. In the stock market, they are commanding heights. 40-50% of market cap used to be PSUs. Then it became literally nothing. Wealth creation was literally zero in 22, 23, and then this thing happens. And it was crazy. I mean, it was completely unreasonable where the valuation had gone. 3P, 4. Coal India, I think, was low single digit, like 2, 3, 4P, 40-50% ROE, payout of 9-10% yield. So clearly, as if the coal is going to stop. I mean, like next 12 months. And he was not able to supply coal. Even now, there are shortage of coal. So I think the markets have the tendency of the whole crowd somehow. There is a problem with, I mean, any markets, that they come together and they make a theme very, very unpopular. It's a myth. So you, I mean, the guys who made money, obviously the guys, they didn't buy into PSU. They had PSU somehow. And then the whole thing reversed. And they made money. Now, you deliberately go and buy PSU at some good price. I don't think that is going to make money. I mean, you have to find your own way of making, but it's not a generic call that you can make money out of PSUs.
You know,
as a house, we have benefited a lot.
Yeah, they were the guys who were
some of the
sitting.
PSUs that we had with conviction for a very long time, I think they ultimately turned out to be very, very good. A lot of credit to the government for bringing in the operational efficiency, the capital efficiency that over the last couple of years that has been brought in, and which is reflecting in the market. But at the same time, the whole, I mean, it's not a sector because I think companies are in different kinds of businesses. But again, there were pockets where because of the low floating stock, a lot of euphoria and maybe the narrative got ahead of the fundamentals. Prices reached a level where there was no way incremental money could have been made. So it's good to see some bit of correction there.
Let me welcome another set of stars who've joined our galaxy. We have Mr. Nilesh Shah from Kotak AMC and S. Narain. Thank you very much for joining in. We want to hear more from you as well. But if I could just extrapolate that question on PSUs, Hormaz's question, to I think a larger issue that a lot of investors, mutual fund investors, would be confronted with today. They're seeing the value of their investments erode. Now, human tendency would be that even if I don't need the money, my God, yesterday I was up 50% on my 2-year return or whatever, and today I'm up only 30%, tomorrow it's 25%. So the tendency seems to be, should I just book profit right now? So Navneet, what's the advice that you'd want to give to this very genuine question that I think a lot of mutual fund investors would be having today?
That should be book profit because
you're seeing the value of your portfolio fall. You don't necessarily need the money, but you want to feel smart, like I've preserved my gain, right? And then you don't want to.
After that, I mean, you pay tax now, you put that, and then maybe you wait for the correction. And it's very, very difficult. I think all of us over the years, we have heard that, we have told people that it's the time in the market. May sound like cliched, but it's the time in the market, not the timing. I think none of us have been able to do that, and I don't think easier said than done.
Yeah.
Let me give you a nice quote here. Patience is bitter, but fruits are very, very sweet.
Oh, nice. That's
a better one.
So,
that's a good one.
I mean, you have to bring patience to investing. You can't be always all-time high, and all the correction has to be in my account, isn't it? That's what So who's going to take the correction?
I think
I'll give you an example. So someone called me and said that, retail investor who's also into direct stocks, said that I bought HDFC Bank because it's supposed to be a long-term fundamental good bet, right? And it's falling right now, but it'll do well. So that's my thought process. I said, good for you, congratulations. The same person sort of calls me again saying, I sold HDFC Bank because I was hearing that they have some structural growth issues. Next couple of quarters will be difficult. I sold it, but now it started rising again after this quarter. So that's the kind of trap that people get into, even though they want to be, fundamental investors.
I just want to warn people about one thing. So in February 20, we were here when we touched that high of 12,000 on Nifty. In next couple of weeks, we fell to 7,700 by 24th March or so because of the COVID. And from April onwards, what happened that as markets started recovering, we started getting redemptions because people had this psyche that I've seen the fall from 12,000 to 7,700. As it went to like 9,000 and 10,000, people thought, let me lock in my gain because still we are hearing about COVID and whatever the impact on growth. But all of them have missed out on the big rally over the next 3 years. It's very difficult to time it.
Just one thing I want to ask. We're not in a 2000, was it 18 or 19 when mid caps and small caps kind of topped out, and then we didn't do anything for the next 3-4.
18, yeah.
18, right? It was January of that year. Raamdeo, any thoughts? We will only know in hindsight, but that was a top, and then for next 3-4 years, absolutely nothing happened, right? 4 years, mid caps and small caps.
I don't remember, so actually I can't say anything.
But do
because
you think this-
I was fully invested at top of the 2008, and at the bottom also I was fully
Not 2008, 2019, right?
19 you're saying, okay.
Yeah.
Even then I was fully invested. And I've done well. So I can't figure out why.
That is the answer
That's
then.
the answer. That's how long-term wealth is
Navneet,
made. Yeah.
any thoughts?
No, I mean, the investors will become more discriminative. I think, as I said earlier, that in the last couple of quarters, everything goes up. Good news, not so good news. I mean, good result, not so good result, but market just goes up, the stock just goes up. I think it will change now. And people will start looking at the fundamentals again, which is a good thing. Even now, after the correction, there's part of mid and small caps where there's still froth. I mean, even at this valuation, they haven't become so attractive that you just go close your eyes and go and buy. I think so. It's good that sanity is coming back.
Nimish?
Raamdeo, you spoke about identifying a tailwind, and I believe you've turned very bullish on the new age businesses. You personally invested into Zepto. Your private equity owns Swiggy. Your fund owns Zomato. What's the view there? And I'm going to toss it to one of your colleagues as well, who's going to manage the digital strategy for Motilal Oswal AMC. But your first one, then I'll go to him as well.
Yeah, so I fundamentally believe that when anything goes digital, see, we have seen it very closely. In 87, the total transaction in stock market was 200 crores per day. Today, and settlement was T plus 15, and we used to labor to settle that. Today, it is 400 lakh crores per day. Okay. There is no industry which has grown at 2 lakh times in 30 years.
Yes.
Okay, so that is possible purely because of technology and digital.
Yeah.
Okay, and it's still growing at 50. In fact, regulators are scared of the growth of the industry. So much so. So anything goes digital, it just goes wild.
Okay.
Okay, so now grocery is going digital.
Yeah.
Your food delivery is going digital. Everybody is a consumer. I mean, you can see in your own house, there is actual consumer behavior change and intense.
Okay.
And these are not small categories. There are $1 trillion categories. And how many guys? 3 guys at early stage. So you have to, and it's not only about them. All the digital business, whether it is in payment, whether it is in insurance, whether it is in navigation or whatever you say, anything goes digital. I mean, how many times you see your map when you're traveling for half an hour?
Absolutely.
Otherwise, who's going to tell you where is this particular place? Right. So I think the use of digital. So my sense is that like what is happening in US and China and all, I think the number of digital companies in India are going to explode sector after sector. And I don't know which one will go 100x. Sure. But if you have the full bucket of 15, 20 companies, the entire bucket will go up by maybe 25-30% in next 10 years.
Let me go to one of your colleagues. Varun is here. Varun, thanks for joining in. You've done a lot of work on the digital space. If you want to just quickly run through your thesis and some big numbers on why you feel it's an opportunity for the decade.
Yes, sure. See, Raamdeo ji has covered most of it.
Yeah.
But we are seeing digital coming in each and every sector, right? We saw these trends in the US, we saw these trends in China. India just lagged behind, but we have all the digital pillars in place today. So when we are looking at next 10, 15, 20 years, we know that digital companies are going to emanate from each and every sector in various constructs, be it B2C, B2B, or even B2B2C. And that is something that we are, banking on right now, that this is a big tailwind, like just like what, Raamdeo ji talked about. And possibly this is going to be the biggest tailwind across sectors over the next 10, 15, 20 years.
How big could be the TAM? When you talk about total addressable market, how big could be that market on the digital side?
So currently the numbers that are coming out are, currently we have about 8% of our GDP as digital. And very quickly over the next 6 years is going up to 20%. Oh. And it's not going to stop there. You can imagine, this penetration is going to continue to happen.
Can this happen, Raamdeo ji? 20% of GDP coming from the digital companies?
It looks like big, but compounding is always very mesmerizing, particularly 10 years, 20 years, what it can do.
Okay. Varun, you want to add anything else?
Absolutely. I think it's quite fascinating that we are seeing so many new companies, smaller companies, which are gaining scale phenomenally. And we're very excited for the next few years. We'll see many more new companies coming out and get listed. Exciting times for us.
Okay.
I want to take that point forward, actually. The fact that you mentioned the penetration that is growing exponentially when it comes to digital. 2 other sectors which are in similar categories, not digital exactly. One is financialization of savings that you just mentioned. The number of demat accounts, the way it's growing exponentially, but the penetration is still not as to that level that you would think, okay, it's a massive sector. Same for insurance, but insurance, even after so many years, it's not managed to reach that level. Do you think AMCs or this financialization of savings as a theme would be a faster scaling theme compared to insurance when it comes to penetration exposure?
Yeah, I mean, see, it's a savings product. This one is entire savings product. So what we have seen in broking and all, I mean, the moment it has gone digital, the ease of boarding and participating has become far easier. And see, one broking account, my broking account could be worth hundreds of crores. Okay, but my insurance account will be only that much. How much premium can I pay? So that opportunity size is my total savings. If I'm worth 1,000 crores, my entire 1,000 crores is available for trading and wealth management and asset management, all sorts of things. But insurance is not like that. So TAM gets slightly distorted when it comes to entire capital market, and that to digital.
You know, we're talking all the big stuff, and that's what we should do, right? Look ahead, and but slightly near term. I want to just ask you, Raamdeo, how much more?
Huh?
How much more on the downside? You think?
Downside?
Yeah, 7% market has fallen. Nifty has fallen from highs. How much more? Will we be higher by next Diwali? You think?
Next Diwali for sure. For sure will be higher, but how much higher I don't know. But these things are, see, first thing is it's nothing to do with India.
Right.
It is to do with what happened in China.
Right.
China did a stimulus and people got excited about it.
Right.
They might again be disappointed. What is there? And then people run from there to here.
Correct.
My problems are my own earnings, so that we must address.
Correct.
We can do nothing about China's stimulus.
Correct.
So I think that's a temporary phase. We have to pass this time, and what I was, just think the day on which FIs become neutral or positive on India, what happens?
But do you think it's possible we are in a bit of a time correction phase? We flatline for a while. It's possible.
I mean, don't ask me like a chartist. I don't know. I've never seen.
We have Chandan right there.
Chandan is there. You ask him. He's the guy. Actually, he's the guy. I mean, he spends 24 hours looking at charts.
No, we will bring him in as well. But do you think the market does nothing for a while? I mean, the go-go markets we had, the euphoric markets for the last many years.
Yeah.
That we kind of temper a little bit.
Pace of 15% is on. Last 5 years is only 16% return. Let me tell you. Nifty return is just about 110% total for 5 years.
Okay.
That is about 16%.
Yeah.
I don't have any problem in saying that it could be 100% up in next 5 years.
So,
and in next 10 years, for sure, it will be 4x.
So market is going to double.
Yes.
In
5 years.
In next 5 years. So you.
That is my expectation.
That's your thesis.
That's my
yes.
expectation. I mean, who knows?
All right.
I guess with that, we'll wrap up this part of the conversation. Thank you so much for joining in and, shedding some light, in the festival of lights on how we're looking at wealth and our investments. Well, we take a very quick break, but don't go anywhere because on the other side, we have Nilesh Shah as well as S. Naren joining in with their thoughts on how the market is placed.